At the end of the day, Happy Trader just crushes the market. And not only do we crush the market, we crush hedge funds. This net profit is where a lot of people would be with their salary this year. Your CEO and head quant at happytrader.io. Today, we're going to be running a year-to-date 2024 backtest all the way up to today, June 26, 2024, using the ES futures. We're going to be looking at a couple different time frames, but we're going to start with our bread and butter, which is our long-only strategy, which goes uptrend to downtrend on these signals, not these signals. This is not super trend or any free indicator available. This is much better. So good luck trying to trade with those indicators. That's how I'm going to start the video today. So anyway, we're going to be using our long-only strategy, and we have our buy AI and sell AI signals. They are superimposed, and you can see if we just toggle the strategy off and then on, that's how we're going to be looking. Now, we're going to make sure our date range is set properly. So the next thing we're going to do is set our date range, January 1st, 2024 to June 24th, 2024, which we already know is not today's date. So we're going to switch that to the 26th. And the next thing we're going to do is take a look at our margins. So we want to make sure our margins are lined up. We have a $12,980 overnight margin. You can see it's a lot less if you're day trading. Now, keep in mind, before I show the backtest, this is the ES, is the S&P 500. This is what your mom and pop and everybody that you know has in their fund or whatever, doing 7 to 11% per year compounding. And we're going to show you the power of Happy Trader. So we're going to go ahead and just check our parameters. And we want to set this to, yeah, that's actually fine. We can do 13,000. We'll just round up, and we can do just one contract. No pyramiding, no orders in the same direction. And let's run a report and start analyzing what we have. So right here, this is a pretty good report. Now, percentage-wise, obviously crushing, but we have to address the elephant in the room, and it's this. It is this drawdown of $14,150. And that can be a problem, right? So there's a couple ways that you can deal with that. The first way is that, instead of taking that drawdown, you can just take profits. So if we go to the list of trades, you can see that when we start to draw down, you tend to get some kind of run up. Now, this trade was pretty much a losing trade, and even this trade, and yeah, you could even say this trade as well, but not this one. You have the ability to go in and just take profits wherever you see fit. So if you're a more experienced trader, or if you're just someone who wants to get gains in the market, and when you see green, you take the money, this would be like someone walking up to you with a $100 bill and saying, hey, do you want this for free? And you saying, oh no, I'm going to wait for someone else to come up to me. So you have to just watch your greed. But if you are someone who's a little more seasoned, you can get into some hedging techniques that I'll talk about in a moment. So we have a return of 147% over the course of this year. We're only through 2 quarters. So, do the math there. This is like how many years of S&P 500 gains, right? Now, the other thing that's great is 30 closed trades. You're still absolutely crushing the market, and you're not getting too much drag, if any, really, from commissions and fees. Percent profitable. This is a little bit different than our normal Happy Trader conventions. Typically, we're winning about 1 out of 3 trades to get our positive expectancy. Don't get it twisted, because when you have an 80, 90, 95, 98% win rate, like a lot of systems and fake gurus are out there talking to you about, you're usually going to get wrecked on that 2 to 5% where things don't go your way. So there's that problem. Even though we're only winning 46% of our trades, look at what our average trade is performing. Almost over a quarter of a percent, or $638. Great, right? So out of 30 trades, the overall rake for this year to date, which 30 trades is super low maintenance, is $638. So that is spectacular. This net profit is where a lot of people would be with their salary this year. Just letting Happy Trader run their alerts, right? So just literally setting up these alerts, going into Happy Trader, Sentiment AI with Illumitrend, adding alerts for buy and sell AI, and you can turn it off. You have no idea what's going on. You turn it on, boom, all of a sudden you have data to go off of. So that's the value of Happy Trader, right? Another thing that I want to go into is approaches. So I mentioned the approach of the drawdown. So when you enter, you never really know at what phase you're at. You could be here when you're entering and take this drawdown initially. The other way to look at it is you can hedge. So if you either get to a point to where you put on your trade, let's say you put on your core position and you're long, right? We're running our long only. So we're going long with the market. The market tends to go up over time. We're using a longer time frame, so 45 minutes, and we're looking at a long time frame, 6 months, right? So what you can do is if you do anticipate a market drawdown, the long only strategy is not going to work as well. So what can you do about that? You can do a couple things. You can buy protective put options. So you can have your core strategy, your core position running long with the ES futures. And if you happen to get to a peak, a mountaintop where you are super happy with the gains and your percentage gains look good, you're winning 1 out of 3 trades or better. In this case, we're winning almost 50%, which is great. And you want to avoid a drawdown. Well, you can set up a hedge. But what I like to do, and this is not financial advice, disclaimer, none of this is. And before I go into my hedging technique here, I want to make sure that you know that this is for educational purposes only. So make sure that you're ready to handle these types of situations and position sizing before you attempt something like this. You can also use paper trading. And for that, I can say that that is advice. So paper trading is risk-free. You're not using any money and you'll be able to virtually trade using real-time data. So what you can do is put on that core position. And if it draws down below where you started, if you can stomach going up to here and going yay, and then going, oh, wow, what happened? And, that usually precedes a huge up move, as you can see is the case here, right? So you get these drawdowns and then it ends up even higher than it was. So that's how the markets work. It's called a shakeout, right? So you can put on that core position and use protective puts. You can use futures in the other direction if you get under that initial capital. You can use that initial capital as your backstop. And if you go down into the red, like we might see on some other time frames, let's actually look through them. We're going to run the same back test on the 30-minute. Here we go. You could put on your position, immediately go negative and say, hey, I'm not comfortable going too far negative. I'm going to put on like a NASDAQ or a Dow future. I recommend maybe the NASDAQ. Again, not financial advice for practicing paper trading. But you can see on the 30-minute chart, 1 out of 3 trades. But look at this drawdown. So you might want to take some profit. If you have extraordinary gains that are vastly outperforming the S&P 500 6 months into the year, you might want to take some profit. But at the end of the day, Happy Trader just crushes the market. And not only do we crush the market, we crush hedge funds. So hate it or love it, it's facts. Subscribe if you want to see some of the longer back tests. Go to the other videos. We've done multi-year back tests, and we have done through the COVID crash. We've done through the bear market. And overall, we are outperforming most, if not all, hedge funds with a product that's available to the general public. And the next thing we want to look at is, unwinding that hedge. What's that going to imply? Well, when you go to unwind your hedge and you have your core position that's going underwater, hedge goes on, and then you come back up, you get your head back above water. Well, what's going to happen? Well, you can start to unwind that hedge. And if you're running MES as your hedge, you can just take off 2, 3, 4, 5, 6 contracts. Ultimately, you're going to prevent problems like this, right? Where you draw all the way back down from a max gain, which is really double topped, all the way out here, months later, days later, whatever the time frame you're looking at. But you want to avoid this huge drawdown, right? So you can delta hedge anywhere on the performance graph. If it looks like the market's getting a little overheated, maybe take some profits. Maybe close your position. I think I would close my position and wait for a pullback, and look, you get it. So you don't have to wait long for these pullbacks typically. So that's how I like to handle these drawdowns, is to either just take your profit. And again, you do not have to trade from uptrend to downtrend like we do in our back test. You can take your signals using Happy Traders. So just turn it off, turn it back on, go into your signals, add alerts, go into buy and sell signal and sentiment AI and buy and sell, set all those alerts. You're going to get them on Happy Trader and you'll get them on TradingView. You can set them once per minute, once per bar, whatever way you want, and set it up like a buy signal. It's going to go off on your app. So if you're just like not sitting at your computer, you get a notification. Great, no problem. That's 1 out of 30 trades that we've had. 30 times in 6 months, you might have to look at a trade. to be able to have the opportunity to make 147%, not too bad. So again, if we go back to the 30-minute chart, you're going to have 60 trades. So it's going to double, right? And you're going to get more pronounced drawdown. You're going to get choppier the lower the time frame. So let's go to the 15-minute, and you can see that the lower we go, you can see the overall expectancy is fine, well within happy trader expectations and conventions. Average trade expectancy drops. And the thing is, you're going to take these drawdowns and you're going to want to hedge, right? Risk management is the cornerstone of all trading of any sort. So the next thing we want to do is drill down even further and see what it looks like when we get even choppier. Let's see where we start to get chopped out of the market. Still 105% if you can stomach the drawdown and you can fund that up as far as getting margin called. If you don't mind getting margin called and filling your account up, happy trader's great as far as just taking whatever percent you're going to get. You're going to get the full percentage if you just take your margin calls or just put more money into the account to begin with. So put 40K in there instead of 20K, right? Not everybody has that kind of cash sitting around. So for a lot of folks, either taking profits or delta hedging is going to be the best way to do it. And if we go down to the 5-minute chart, let's drill all the way down here. You can see that it gets even choppier in that beginning. Let's call a spade about 6 years on the low side of S&P 500 gains with the same starting capital that you're getting in 6 months. So despite this drawdown, you're still doing pretty well. You draw down to $9,300. So what? Put more money in the account. And there you go. You handle that drawdown. If you look through all of the back tests on Happy Trader on our YouTube channel, we have not had a single one that has dramatically drawn down to where it's completely financially devastating. So if you can't trade the full ES, go to the MES instead. It's 1/10 the size, but you're going to get 1/10 the gains. So you'd have $910 in 6 months as opposed to $9,100. And I can guess which one you're going to want. So again, this is Ryan from happytrader.io. I'm going to suggest that we look at the 45-minute chart because it's just so smooth. Look at this equity curve. We never go underwater. We have 147%. Have a great day and happy trading.